Hi, this is James from McKayResearch. I hope everyone is doing well. Now, for this week's video, I wanted to talk about one of the biggest trending topics in the world of crypto and blockchain, and very much feeds into this narrative around the new economy. Now, unless you've been living under a rock for the last few weeks, it would have been impossible not to have gotten wind of the NFT and how that is, in a big way, shaken up the art world and is increasingly bleeding into other spheres such as the professional sports realm, into the music industry, and into other various technology platforms as well, such as Twitter. We've all heard, for example, Jack Dorsey having sold his original tweet for over $2 million. So I wanted to make a quick video on what I see as the major pros and cons behind this NFT explosion. And at the end of the video, I'm also going to talk about how what we're seeing playing out in the NFT space right now actually fits quite neatly into pre-existing trends in the realm of investment, technology, and also underscores the issues behind broader adoption of blockchain technology. So without much further ado, let's jump right in. Okay, let's just jump right in with some definitions here. So first of all, what is an NFT? So I think most people will know that it stands for non-fungible token, and that is a unit of data that is unique and inscribed on a digital ledger. So as you can see, the color coding is different here because the non-fungible aspect is different from the token aspect, because obviously a token can be both fungible and non-fungible. Fungibility is just a measure of interchangeability of one item to the other. So if I have a US dollar and you have a US dollar, we exchange it, then the net effect, of course, is nothing. There's no exchange of value, there's no exchange whatsoever. It's just one and the same. If something is non-fungible, of course, it just means that it's unique. And here I give the example of Bitcoin and crypto. Of course, the same could be said for regular fiat currency. So they're one and the same. NFTs are not, and they are not interchangeable with any other and simply cannot be replicated in any way, at least in theory. Now, this technology lends itself very well to the art world, and the initial boom and explosion we've seen around NFTs has really emanated from the art and high-end art space. We've seen many digital artworks tokenized and sold as NFTs. So here I've got a very nice picture of the first 5,000 days, which I think most people have at least seen once by now, which is by Beeple. And that sold for $69 million just a couple of weeks ago in March. So again, illustrating the degree to which big money is flowing into the space. But it's important to bear in mind that NFTs can represent basically any digital file. So it can be a painting or artwork. It can be especially digitally designed. But it can also be an audio file, so a song, in other words. It could be video. It can be part of a digital platform like YouTube or Twitter, video games, or any other form of creative work. Okay, so looking at some of the pros of NFTs. Now, this would probably be a much longer list, but I've just chosen three for brevity's sake that occupy my thoughts the most. Now, the first one that I've chosen to highlight here is the fact that it has the potential to unlock new revenue streams in art, collectibles, gaming, technology, and even in real assets such as real estate and others as well. Now, this is pretty obvious. The aforementioned example of the first 5,000 days being sold for $69 million at Christie's auction just illustrates the sums of money that some of these artists are now able to command that ordinarily wouldn't have been the case. And certainly for the more entrepreneurial minded, there are many, many opportunities outside of the art world, in technology, so like in gaming, that is a rapidly growing industry, and increasingly more and more people are willing to part with their hard-earned cash to buy or carve out their own little piece of digital or virtual real estate. So there are all sorts of opportunities with NFTs tapping into its potential for digitizing scarcity over the long term, potentially. Okay, so the second point that I wanted to highlight here is that NFTs can transform the attitude towards ownership in digital art and can make it easier to own certain real-world assets. Now, whereas the high-end art market, for example, was once exclusively the preserve of the high net worth individual, for example, the advent of NFTs has really democratized the process a little bit. Granted, now that this trend is firmly established and the big pieces are going for vast sums, it probably actually is reverting back to what it was once prior. But it is making it a lot more open and democratic in terms of who can participate in the market. It's also uh, democratizing to a certain degree the way in which artists can actually go about monetizing their works as well. That doesn't come without its own issues and distortions, but at least it's a way of making that entire market a little bit more of an even playing field. Now, at the same time, as we've just said, that it's not exclusively limited to the art world, it will also make it easier to own certain real world assets and collectibles such as classic cars or real estate or rare numismatic coins. All of these can be digitized and tokenized, and these NFTs can then be traded instead of the real world assets, which will then have value. So the third pro that I wanted to briefly highlight is that they could potentially introduce millions, if not billions, of people to the world of cryptocurrencies and fuel broader adoption. Now, I don't really need to flesh that out any more than that. It's a lot of the cryptocurrencies are their success really depends very much on the network effect, and as only just over 100 million people worldwide are have actually adopted cryptocurrencies, it's still a very low number. The NFTs could introduce larger numbers of investors or retail investors or institutional investors to the space and massively increase adoption of not only blockchain technology but the cryptocurrencies themselves. Which Okay, so as there's always two sides to every coin, it's also important to mention briefly the cons of NFTs. The list is probably quite long here, but I've chosen three that resonate with me the most. So the first con that I've highlighted here is the fact that the ERC 721 protocol standard is new, and that makes building decentralized applications for NFTs difficult and time-consuming. Now, of course, we're all very familiar with the ERC 20 standard, which is 95 plus percent of the tokens built on Ethereum are the ERC 20 tokens. And the difference between the ERC 721 and 20 is just the fact that this protocol standard has inside of it a deep repository of metadata, and that, of course, that's necessary because that is what describes exactly what makes that particular asset different from everything else on the market. So it will have all the details about every characteristic about a certain artwork or a certain song or whatever the NFT happens to be. So it will take some time for the technology to really catch up with the demands of the shifting landscape here of the marketplace. And so for now, of course, it just makes it a little bit more time consuming and difficult to build. The second con that I've highlighted here is the fact that legal rights are not yet firmly established. So for example, what rights, if any, does the buyer have over the original work? And really by that I mean if you purchase a physical artwork, typically that will be signed by the artist. That can be independently verified by an expert, for example. And although the NFTs do solve some of the issues around digital artwork, in that if you hash a piece of digital art to the blockchain, you can be absolutely sure that that is actually the original work. It doesn't really spell out exactly what rights the NFT gives you over the original work. So if you were to own an original Picasso, of course you would have the legal title to that painting. And of course you would then be able to determine how you monetize that. So you could, have the control over the resale rights. You could also commercialize that painting by putting it on display, etc. But it's not clear whether for NFTs any such rights of the original work actually are in place. In a way, that's good for the artist because it means that you get to sell a digital representation or tokenized version of your artwork. and you also get to keep the original. But it's not exactly clear to me, and of course, please add your comments below if you have any more information on this, but it's not clear what exactly the purchaser of the NFT gets beyond a digital signature or stamp to prove that they are the owner of that tokenized version of the original artwork. So the third con that I wanted to highlight is the fact that the potential limitless supply of NFTs could generate inflationary pressures in the long term, and that will have real implications for the secondary market. And by that I mean that the NFTs are very similar to certain cryptocurrency projects in that the price appreciation potential of certain crypto assets is very much linked with the its tokenomics and the speed at which it mints new tokens. So there are many coins out there whose price appreciation potential are limited simply because the tokenomics are just too inflationary. Now, if that's the case for crypto assets, then the same could be said of NFTs, where a potential limitless supply of different artworks or pieces of the same artwork that could be tokenized could massively flood the market with NFTs and put downward pressure on the overall valuations. Now, of course, this will tend to impact the secondary market a lot more, simply because in the higher end primary market, you'll have many high net worth individuals trading NFTs of original artworks that we've seen, for example, in Christie's and Sotheby's that go for millions of dollars. So those will tend to retain their value simply because there's less of them. But in the secondary market, that remains to be seen what impact that will have. Okay, so how does the NFT boom fit in with existing trends? Now, this could be a long list. I've just chosen three that reflect what I've been thinking about the most recently. Please feel free to leave your perspectives in the comment section below. So the first point that I wanted to highlight is the fact that the massive NFT boom is very much in keeping with other periods in the development of the cryptocurrency and blockchain space. So here I think ICO craze of 2017, 2018, and think the DeFi mania that started really last year and has actually continued on into this year as well. Now, for example, for the ICO, I have some charts here. This is by CB Insights, and it shows really what happened in Q2 and Q3 of 2017, where we had the ICO funding actually just completely overtaking equity funding in the blockchain space. So we had $757 million in the second quarter of 2017. I mean, that's up 20x from the first quarter of that year, and even that then doubled in the third quarter of 2017. So a huge increase. Now, what we're seeing in the NFT space is something quite similar. So this is the monthly sales volume on the OpenSea, which is one of the most popular NFT trading platforms. This is in US dollars, and we see a massive increase in the first quarter of this year. So new highs in January over previous months last year, but then just an explosion, 10, 20, 30-fold up. So again, the boom and bust cycles in the crypto asset space are very much alive. Obviously, this is slightly different, and it seems to me that every time these boom cycles happen, they are always turbocharged more and more. So the crash in the secondary market of the NFTs will probably be quicker than anything that we've seen before. But again, they're very much consistent with other phases of the development that we've seen so far in this space. Now, the second point I wanted to mention is the fact that the NFTs have rejuvenated a stagnating global art market and provided an avenue for investment amid a global contraction. This essentially references the fact that the global art market, particularly on the high-end side, has really stagnated in the last few years, and the NFTs, as we've seen by the crazy valuations that have been coming out of that marketplace in the last few weeks, have really just reignited the art space in general and the high-end market in particular. Now, for the high net worth individuals in particular, the art space has been a small but very important aspect of their portfolios. They've often used that to sort of diversify their portfolios along with the more traditional holdings of stocks, bonds, and gold, etc. So this is provided a new avenue for them to shore up their portfolios that have all taken a hit due to the economic circumstances that were present before COVID and that have been exacerbated also by COVID. So very interesting to see how this, what role this market is now going to play, given the fact that the NFTs have now come online and reignited the fire, as it were, in the marketplace. So the third and final point I wanted to make about NFTs and how it fits in with existing trends is the potential IP concerns around double tokenization and how that underscores blockchain interoperability issues. Now, there are really two aspects to this, and the first really relates back to what I was saying around the lack of clarity concerning the NFT holders' rights to an original work. So if the NFT holder doesn't have any rights to the original work, then there's really nothing stopping an artist in tokenizing their artwork on multiple blockchains. And here that could be done to really hedge one blockchain against another. So if you think that Ethereum is going to be the dominant force in the future, of course you would go ahead and tokenize on the Ethereum blockchain. But if you think there was a chance that Ethereum could fail, then you would hedge against that failure and also tokenize on another blockchain. So the question remains that how would buyers protect themselves against such an eventuality, and how would they even know for sure that they're buying the first tokenized version of an artwork or not another artwork that was tokenized on another blockchain? Now, the second issue here is that there's also a potential problem around artists tokenizing the same artwork multiple times on the same blockchain. So here, it's important to note that while NFTs are supposed to be unique in every way, just changing a tiny aspect of, say, a digital artwork, even if it's a shade or a pixel, then that will change its corresponding metadata, the associated metadata. And of course, that will have a knock-on effect in that it will change the hash. So the hashing will be different. So there, if we're talking about a different hash, of course, we're talking about a fundamentally different NFT. And even if it's next to identical to what could be the original work, then that, of course, devalues the work itself and undermines the entire process. So there, in a nutshell, are three really important points that this industry still has to overcome, and they're very much in line with some of the trends that we see both within the crypto blockchain space and outside of it as well. So I hope that was helpful in providing you with an overview and framework with which to match some of the key developments we're seeing right now in the NFT space with existing trends in the spheres of technology and investment. Now, of course, with any new phenomenon, there's always going to be a healthy number of known unknowns, which I've done my best to highlight in this video. But also there'll be many unknown unknowns, and I'd love to get your thoughts on both what those might be and whether you just think the NFT movement is a net negative or positive, both for the owners of the works themselves, so the artists, and for the wider adoption of blockchain technology. So please leave your comments in the section below, and I look forward to seeing you all in the next video.